we've got this kind of grind sideways. Doesn't mean it's bearish, big picture yet until we get a macro trigger. But as mentioned back here, right, on this kind of 19th, we did hit a lot of my interim price targets after third largest VIX spike in history, but the fastest reversion to the mean in VIX history.
This short clip is presented by Club. Club provides access to Samantha LaDuc and her team of professional macro and micro traders, analysts, and educators. Club is ideal for active traders, investors, and institutions who want Samantha's best-of-breed market timing calls across all asset classes and timeframes like chase, swing, and trend. Get the trade before it happens. Sign up to Club now and get full access to daily live trading room with Samantha LaDuc, Slack trading desk with detailed analysis and trades, custom trade support when you need it, and much more. For more information, visit www.LaDucTrading.com/club.
So we know why. Talked about forced buying. It's not organic, but nonetheless, it really works. And we've got a lot of macro triggers potentially. August 23rd was, of course, one that we needed to get out of the way. And Powell was quite dovish. I wrote about that at length on Sunday. Now we've got Nvidia on Wednesday, followed by core PCE on Friday. Does that matter anymore? Not so much. Fed's not really focused so much on inflation as it is the labor markets. So this should matter. And it doesn't mean we're not going to have a nice print, by the way, in non-farm payrolls. And it doesn't mean that unemployment claims, which is how I really, really like to track it. They're not surveys, right? I don't like surveys. Anyway, the point is, it doesn't mean that we're not going to have a little bit of a stay of execution. Let's put it that way. This is still 10-year above 3.8, crude above 70, and jobless claims above 267. So we're coasting. We're coasting. We do have CPI, PPI, and then, of course, FOMC, where it's pretty much a fait accompli that they will cut since Powell's already talked about it. Now, we have this one more high, which I know I talked about after the June pullback, we'd have one more high, and then I think we're done for the year. I still believe that. I do think it could take 1 to 2 quarters. In other words, into end of year. We're just August, right? September, October, November, election, December. And then next year, we could have some fireworks. So that's what I'm really more focused on. But in the meantime, we definitely have gotten into the daily gap fills. Then we pulled back and softened, which is kind of de-risking ahead of Nvidia earnings, and then they probably beat, and we probably move higher into those hourly gap fills. But I think we are still going to be in a tough place to have a very strong backdrop. Right now, we had a growth scare, quote unquote, for that July, August dump, but I don't think that this is going to be a one and done. So just big picture, so far, this bet that I had that we would bounce into 2 ratio of my growth value and then have a fake breakout, fast failure. In other words, it would not have such an easy time to get and stay above 2. Has worked extremely well. Take a look. This is the right now, yesterday, as of close. Look at that. We got up into the 2, went a little bit above. That's the fake breakout, and then the fast failure. The translation of that is just basically we're digesting a lot between 1.95 and 2, this ratio, which allowed small caps to get going in a big way. Also, small caps got going, but they also stopped very firmly at that 222 yesterday, which is also kind of part and parcel for the whole exercise. If it was easy, everybody would do it, right? Aftershocks, we haven't gotten really too much of a VIX bounce, although I did write on Tuesday, I expected that we would have VIX 1429 as support, and that definitely was hit. In other words, market's bullish into 1429 VIX, and then we bounce in VIX, and market goes sideways or maybe softens. No problem, that's happening. We have still yields tussling with that 3.8%, yada, yada. So I really think that we have this Nvidia earnings to get through before we can go through the daily gap fills of 56.39, which we already tapped. 56.39 was here. SPX was here. So we already tapped that, got up here, came back down, came back, but we're not falling apart. I mean, this is still working its little magic. And 56.42.38 is the daily gap. We've hit some levels, but we have not hit the last hourly area that I'm looking for, which is 56.58.88. And on the Qs, it is way the heck up here, 495.41. So don't be surprised if Nvidia blows again, 6 quarters in a row of phenomenal growth since basically May of 2023. Never seen below type of announcement. Yes, they're going to have a slowing rate of beats. There's no question, but they're probably going to beat. So don't be surprised if we head back up here into 493. I don't think the market's ready to give up the ghost yet, even if we're soggy and a little pensive heading into the print. The other little level here of 465 is support. So if you like this short duration short, in other words, you're kind of playing on what if we have this disappointment, which is potential, or we have just basic de-risking, which is happening. I can see it in the market as far as concentration risk, right? We have started to pull back. We also have Bank of America admitting that lots of their clients are selling into this bounce. And we have Goldman also saying hedge funds and mutual funds have trimmed exposure to mega cap tech by the start of 3Q, and that for the first time since 2022, the weight of the Magnificent Seven in hedge fund long portfolios declined. That's a good start. So both hedge funds and mutual funds, according to Goldman, have trimmed positions on net to Microsoft, Nvidia, Google, Meta, Tesla, and they've added Apple. I'm not bearish until we get up there. Big picture, I think we really have to get up there. But in the interim, you can see they're getting a little nervous ahead of Nvidia, right? So we have this nice bearish engulfing, and it is trying to break the 8-day, which is that pink line. And it wouldn't surprise me if we have some shake and bake down to 465, but I still absolutely feel that those gaps above are going to get filled. So long story short, we have tons of gaps on the downside. We have to start breaking these levels of support before we're going to go see them. And so far, all we have done since Monday, 8/19, when I posted that, in the interim, we've kind of hit these targets and literally we've gone sideways since. So not a lot of excitement. It is end of summer. What do you want?
Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.